Hey, Gary's Gulch, welcome back. So, been on a lot of travel. I've been gone for about a week and a half, pre-recorded last week's episode, and I mentioned to you that having gotten through cash flow, wealth, and protection, that we're now going to go into the three phases of somebody's adult financial life, and those are growth, income, and legacy. So, big picture before we dig into each one, and today will be about growth, but big picture is that growth is about building assets. That's when you have excess cash flow. You're bringing in more than you're actually spending for your life, for lifestyle, for the necessities of life. And you're choosing to store those nuts for the winter that's coming up. How long does the growth phase last? You know what? Actually, in most animals and plants out there, the growth phase is every year until they pass away, until they're no longer around. You know, if you think of a squirrel, right? I always talk about the squirrel and collecting those nuts for the winter. A squirrel who finds himself in the fall, just like all the other squirrels, even if he's the oldest one around, he doesn't know he's going to die, so he's doing what squirrels do. They are saving up for the winter. And so most animals don't have the ability to think our way, that it's time for us to go. You know, it's time for us to quit, and we give up on life. Shame on us, you know, if we take that path. So growth, I think, is the healthiest phase you can actually be in, because every other one comes from a position of scarcity. You can blend these together, right? Income is really turning assets into cash flow. And there are seasons where that makes a ton of sense. What if you decide you're going to take your grandkids on an around the world trip and you're not going to make any money for the next year or two or whatever this venture looks like? Adventure. So maybe that's a phase in life. And so you turn assets into cash flow, which is an income phase. And then you can go right back into growth. Now, nothing says that you have to stop growing either while you're in income phase. Clearly, if you have income producing rental properties, or you have a business that kicks off cash flow, it is both going up in value and cash flowing for you. But when you think about them as just very specific and unique chapters of life, then the growth phase is, again, where you don't need extra income. In fact, you have excess income and you're building up the assets, building up the value, the net worth of your life. And then income is where you have kind of flipped that switch, and now you're turning assets, you're turning wealth into cash flow. So you're providing income either from your own working world, but normally it is from spending down the assets that you have. And then the last one is legacy. Legacy is a little bit different. Legacy is about setting up your financial life so that you can pass it on to others. And it's not just, you know, I always say that even though we call this legacy, I would say that this is really wealth, because legacy is what you leave inside those around you. But let me ask you, how can you set up life so that you can be like those amazing, generationally wealthy families that some of them are my clients, and I just love having these people around. Big shout out to my clients, Mike and his son David. They have done a tremendous job in 3 generations of just really embracing this concept of legacy and wealth both being important. Wealth is the money that you will one day pass to others, and you're trying to get it outside of your estate, and you're trying to set it up so that it can be somewhat enduring. This is when people go out and they plant trees, right? Physically plant trees, and the kinds of trees that, like teakwood, you know, or other trees that can take even longer to grow. And they know that they are things they're planting that they won't see in their own lifetime. But they are things that they want to plant for the future generations so that they can make this income stream and this wealth sustain and grow. So growth, income, and legacy. There's a whole lot more to legacy. We'll talk about estate planning and all that kind of stuff in that one. But right now we're in the growth phase. And again, I just want to reiterate, you're never too late to start the growth phase. And in fact, you never have to quit the growth phase. I personally never intend to quit the growth phase. There's a lot of reasons behind that. I personally believe that a lot of the dementia problems we have in America is that we've turned off our brains. We've gotten soft. We've allowed this pile of stuff that we have built up to spend down and do the work for us so that we can kind of get lazy and do nothing. And it's not good for us. It's also not very optimistic, because now we have shifted to a scarcity mindset. We don't have a fountain of youth, so to speak, of that cash flow where it continues to get bigger and bigger and bigger, and it outpaces inflation, and everything is good. So I think I will always stay in growth phase, God willing. If my health and my mind allow me to do so, I intend to add value every day I'm on this planet, because I know that it's going to keep me healthier, and I know it'll keep me happier, it'll keep me more abundantly minded, it'll keep me well positioned in gratitude. So that's the journey I intend to be on, but we'll talk about them as three distinct chapters or phases in life, as if you were going to just march through them like a typical kind of American does today. So again, the gift here is to understand that you're never too late. If you feel like you're behind, that's totally fine. You can just take a trip to India, you can take a trip to Ethiopia, and you will quickly find out that you're nowhere near behind, as many other people on this planet are. You live in an abundant world just because you're probably hearing my voice in America or somewhere in the West. And we all live a very, very rich life in a place of abundance where you can be anything you want and have anything you want if you just want to work for it. Remember the great Zig Ziglar, you can have everything in life you want if you just help other people get what they want. And in America, you can help anyone you want, and you can help them get whatever they want. Obviously, there's some laws, but if you work hard and you do things ethically and diligently, you will come out on top. The cream will rise to the top. You will be valued for the services you provide, and people will pay you for it. They will reward you handsomely. So if you feel you're behind, never fear. There's always time, and there's always another great idea, another great opportunity to add value to others and prosper. So growth phase. Before we get there, let's step back just a little bit and let's talk about upcoming events and a quick hot wash of the two that I went to this week. So I was down in Miami, Florida, got to connect with some great friends in this industry. Many of my friends from Paradigm Life that are all the way across the country in Utah and other states, we got to hang out and have 3 really great days together. And I got to observe some elite performers in my industry. And it is always incredible and inspiring to see a master at his craft. I don't care what the craft is. A master at their craft is incredible. It's just awe-inspiring to see what they do. So those were the first 3 days this week. And then I followed that up with a trip out to Las Vegas. Got to go car racing with some dear friends of mine, and shout out to those guys because they turned it into a really awesome week. And then after that, we went to Aspire for More Mastermind. Aspire is the group headed by Andrew Cordell, Eddie Wilson. I'm the primary provider for Family Bank is what we call it, which is the high overfunded, high cash value life insurance that you're operating as a banking system. Got to connect with dozens and dozens of my current clients from that group. Really rekindle some relationships, get some inspired movement forward, and I'm confident they're going to be able to help some great people. At that event, though, we also talked about how to improve your life spiritually, how to improve your relationship with your spouse, how to operate in your health as optimally as you can. And then we talked about some investments and how to use the tax code to your advantage. So there was a ton of great information, great camaraderie, and really promoted the lives of a lot of people there. So I truly did appreciate and enjoy that trip. So what's coming up now in the future? Well, this week, when you hear the podcast, I will be in Little Rock, Arkansas, Memphis, Tennessee, and then I'll finish things up on Saturday in Nashville, Tennessee. So a short trip out to the Tennessee, Arkansas area. Following that, the following weekend, I will be actually the end of that weekend, I'll be down in the Miami area again. I'm going to go to the Homestead NASCAR race with my son. He's going to visit an amazing client of mine who's got a wonderful farm down there. He flies animals all around the world. He's a really interesting family, great client, good friend. And so we will be looking forward to that. The following weekend of the 28th and 29th, I'll be out in Cocoa Beach, Florida, and celebrating a new career move for a close friend of mine. The weekend after that, which is now early April, I will be out Friday and Saturday. I'll be out in Irvine, California at a great real estate event called Empowered Investor Live, put on by my awesome friend Jason Hartman, and they will also have the Rebel Capitalist crew out there if you know that crowd. And then on Sunday and Monday, I will be back in Austin, Texas at another mastermind for some business owners and close friends of ours there in the Texas area. At the end of the month, on Friday and Saturday, the 25th and 6th, I will be in Fort Lauderdale, Florida, enjoying another great industry event with the Aspire crew. The week following that, I will be back home, thankfully. And then we head to Orlando, Florida for the week of the 4th. So the second week in May, we'll be in Orlando, Florida. My wife Sue and I will also be celebrating my son Ryan's graduation from college down in Fort Lauderdale. And then we'll be back and having some fun here locally with some friends. At the end of the month, I'm headed back to Orlando actually, and this is the second Aspire for More conference. This is in Orlando, Florida at the end of May and the beginning of June. Only one other small trip there so far set up in June, middle of June. I'll be up in the St. Petersburg area for I think it's the 13th and 14th. And then we're into July. So nothing in July except for the 4th, of course. Celebrating that here in Cape Coral, I think, with family. Then I'll be in the Chicago and Southern Illinois area for the 3rd and 4th weeks of July. Any of my Chicago fans out there or friends out there, I would love to get together with you and have a drink or have dinner or just hang out and mastermind. And that quietens things down pretty much. And then in August, we just have a couple small local trips. We'll be back on the West Coast again at the end of the year. So, all right, here we go. We're talking growth. And again, the big question that always comes up is, am I too old to do this? Am I too old to store up the nuts that I need for the winter? Well, no, if winter's not here yet, you're not too old. If you still have capacity, if you still have the ability to add value, you're definitely not too old. I like to look back at individuals from world history and take some strength from their stories, like Colonel Sanders. There are just dozens and dozens of people that were already very long in the tooth for how long people lived during their age or during their era, and they still went off and started brand new businesses and did amazing things in their lifetime. The feedback I would like you to take from this conversation about growth is that it generates the capacity to have liquidity. And liquidity is that number one thing that helps turn around just about every financial situation in your life. If you have been able to grow assets and you have stored these assets like we talk about doing in the hierarchy of wealth so that you have those 4 tiers and that foundational layer, you're going to build this hierarchy of wealth like an Egyptian building his pyramid. You're going to build it from the bottom up, the foundational layer being the bottom, and that's the safe, liquid, guaranteed money. If you have amassed, if you have grown wealth to the point where you have satisfied the hierarchy of wealth foundational layer, so you have all of the money that you need for your emergency fund and reserves for your business, then there's very few things that are going to take you out. What if you find out that another COVID happens and no one can visit your store, but you have a mortgage? If you have enough reserves and emergency funds, then you can sustain that indefinitely. What if you have a massive expense? You have to replace a key employee. You have a major vehicle that fails, or you need some big expense to be covered. If you have the emergency fund, you have the liquidity that you need. People will often say, well, I'm going to store mine in the stock market. I'm going to store it in mutual funds. I'm going to store it in the equity in my property by paying down my mortgage. You don't have control over that liquidity. Yes, it might be pretty low risk. I wouldn't say in the markets it's low risk, but it's low risk in the properties. But the times that you need the cash, the time that you're having an emergency, is historically the same time that the bankers are not comfortable lending. It's the same time that other people have a crisis. And so the only way to be that person that is out there buying opportunities when everybody else has to get rid of all of their assets because they need the cash because they didn't set themselves up liquidity. The only way for you to be that person who can step in and buy in the great opportunity is if you have prepared for the long winter with a lot of nuts sitting on the sideline. You have to get comfortable holding liquidity in your life. One of the things that helps you get very comfortable with it is that you can grow the money in an environment that's the equivalent of 7 or 8% at a high yield savings account today. And what I'm talking about is if you can make 5% annually at a tax-free internal growth life insurance policy, then that's the same thing as, let's say, 8% at Chase Bank and their high yield savings vehicle every year for the rest of your life. Because if you can make 8%, you can pay 2 of those to taxes or 25% tax rate. Now you're down to 6, and then you can pay 1% for some equivalent kind of term insurance, and that leaves you with a net of taxes, a net of insurance, no tax. So you got the insurance, you've got a asset that's net of that doesn't have to have taxes on it, And that gets you to the same place that like 8% in a high yield savings vehicle would get you to. So it's an incredible place. And so if you can store cash in that location, getting the same kinds of returns that people who put it into CDs or into treasuries or someplace where it's locked up on them, I-bonds maybe, then if you can put it in this liquid location and get death benefit thrown in, then it gives you the confidence, it gives you the calmness to build up large sums of money in that location. And then you turn that around and you go buy these assets when somebody else needs you to take it off their hands. So growth is about preparing for the storms. It's first about building the foundational layer. And then above that, you want to build those directly controlled, directly owned assets because you're so closely aligned to it in such high level of control and insight that you are at low risk because of that. So if you can maintain high control and high insight into what's happening with your money, then you're low risk. And as you give up control, you take on risk. And so moving above that are two layers that we don't actually even have to play in. We don't have to ever go to tier 3 where we're doing private lending, we're investing in somebody else's deal. And we definitely don't have to go up to tier 4 where we're flat out speculating. Like we don't really know what the guy's doing with my money that's got it. He moves it around from here to there, goes into mutual funds and companies that you're not studying. Like that is just really, really close to where I was last week watching people spin the marble around on the roulette wheel or pull the handle of the slot machine. By the way, today they don't pull handles anymore. They just click on the touch screen and they play the slot. Okay, so growth. Growth is about building up the capacity to have an emergency fund, to have the foundational layer set, and to be able to generate that cash flow, that liquidity by snapping your finger, 100% guaranteed that you know it will be there. All right, so then what do you do after that? Well, you move into tier 2. And again, you don't have to move from tier 1 and 2. You don't have to go beyond that. I'm fairly confident that Elon Musk and many other very successful business owners and entrepreneurs have not bet on other people. They've been betting on themselves pretty much the whole time. Maybe they diversify a little, but I doubt it. I doubt that they do that very much. So as you're growing these assets, as you're continuing to build, right? So we want the foundational layer to be 30 to 40% of your net worth, which means that as you start to go higher and taller and you start to build more and more assets on top of that foundation, you need to go back and lay a few bricks around the outside of the foundation to keep it larger than what's sitting above it so that it can continue to make it stable as it gets taller and taller. And so, when you're 30, it's very easy, very low cost to put a policy in place. The minimum premium is very small. And just about everybody out there, and I just said it and I shouldn't have, they relate premiums, the amount of contributions every year, to a cost. It's not a cost. It is a diverting of capital to grow in an area that is foundational. And it's to build up your savings. So making a payment to one of your accounts or to an obligation you've created for yourself is not a cost necessarily. In this case, you're just simply saving money into an environment that you've chosen and sized to what you think will be useful. But as you get into your 40s, you're now making a lot more money. One, because inflation occurred, and two, because you're becoming a better expert. You're becoming more valuable with all your expertise, and you maybe have passive assets that are also providing cash flow. So the money is starting to flow in faster and faster. What do you do about that? Well, you have to get another bucket. This bucket was created, this new family bank was created in your 40s, and then you do on your 50s and 60s, and eventually somebody's like, hey, I think I'm too old. I've heard that from people in their 50s. I've heard it from the people in their 60s and 70s. And frankly, the actual truth is that if you're healthy, 85 is reasonable to start a family bank. And so going past 85 is a bit challenging because the whole model of whole life insurance has been for 200 years to collect larger contributions than you would for term insurance so that you can grow that cash value and turn it into a death benefit one day in the future, but giving you access to cash value along the way. So it's a runway. I mean, the model for term insurance is that not many of these people are actually going to die and we're not going to have to pay this out. Just think about it really quickly. I just spoke to a gentleman who when he was 30, purchased a $2 million term insurance policy for, let's call it $2,000 a year. It was really about $1,500, but let's call it $2,000. So 30 years, right? So if he dies anywhere in that 30 years, the insurance company lost big time. Why do I say that? $2,000 a year times 30-year level premium is $60,000, right? You can't pay out $2 million if you've only collected $60,000. So how do they do that? So let's say that there's 10,000 people that insurance company insured that was the same age, health, and gender as this individual. And they all go the full 30-year ride when you're 83 to 85 years old at the start time. But if you're 30, they've got, 60 years to grow that money. And so if you put in, $10,000 a year, that would be easy for the insurance company to sustain their profitability. And again, all the profits from a mutual insurance company comes back to you, the owner of the company. So I need you to dispel from your mind all the stuff you've heard about whole life insurance and actually go take a hard look at it. It's just math. It works all day long when you understand the ability to compound money without paying taxes on it, give access back to the owner of the company, who is you, and allows you to use it for any purpose. Okay, so cash is growing, death benefits growing. This thing is sitting in the background as your tier 1 financial asset. All right, so now we've done the growth part of tier 1. Now we're ready to move into tier 2. We got our emergency fund, we got our reserves. Now what do we do? Well, there's 3 really important things in tier 2. Things that you directly control and have insight into how they're going because you're dealing with them every day. Number 1 is yourself. So any money you can put on yourself, any money you can put to work on you in masterminds, in improving your health, in setting up your life such that you wake up every day excited to go kill it in the industry and help as many people as possible, all that money is the best money you will ever spend. Following that, or next after that, is a business. And why a business? Because the business is the best example or the best extension of all of the work you've done for yourself. Let's say you're a small business owner, it's just you're running your pool company, your pool cleaning business, and then you get to a point where you're like, man, I don't want to clean all the pools, or I can't clean all the pools myself, or maybe I want to take vacation, so you hire somebody else and you teach them everything you know, and you continue to build a relationship with your customers out there. So now the pool company can be an extension of you. It can start to leverage and grow and add more and more money than you could do if you were doing it yourself. You moved from a self-employed person to a small business owner. And then maybe you've done something that's innovative enough that you can have it franchised. And now it's happening all across the country. But all of this comes back to the work that you put in yourself. So work on yourself. Number 1, put the majority of the money there. Then leverage into a business. And that business can be any number of things. Look at what you do every day in your W-2 job and figure out, is there a need here that I can create a business or a service to fill that gap and do it less expensively than the company is having to do it for themselves. Now all of a sudden, voila, you're a business owner providing a needed, valued service, and you're going to start to get wealthy, and you can hire other people to do it for you and move on to the next one. That is the path that I'm going to work to optimize for my 2 sons and to get them going on this path so that we can sustain generational wealth. And so I'm focusing on legacy here because I want to teach them how to grow and teach them the benefits of being able to generate income in a tax-favored environment. So growth, income, and legacy on that side. Then the third thing in tier 2, directly controlled assets, of course, is that awesome hard asset that has proven itself across the globe for generations to be the tool that is most likely to build and sustain wealth on the planet. What is it? It's housing. It is real estate. It could be commercial, it could be industrial, but the thing that has universal need is housing. It's providing single-family homes, multifamily, mobile home parks, assisted living facilities, short-term rentals, all of those things, midterm rentals for doctors and traveling nurses. All of those things provide that universal need that is not going to go out of, it's not going to lose it's not going to go out of fad, right? The fad is not going to pass on. We're not going to go out of style. It is going to keep having universal need for people, and they will pay you for the safe, productive, clean environment that you provide for them. All right, so let's see how we did. The gift that I want to leave you with again, in summary and in closing, is that you are absolutely not too old to grow the wealth that you intended to grow back sometime before you got derailed. It's important that you have the protection and the wealth accumulation path in place because of the manner in which wealth grows over time. The protection path means protecting your family from the loss of the most important assets. So if you have a very expensive car in the garage, or you have a very nice house and a lot of equity in it, you have a very productive and useful business, and most importantly, yourself, if you're still out there adding value in the world, which you should do the day before you go to your grave, then you need to protect those things. So absolutely protect the human with life insurance, and protect your other assets with insurance, with umbrella policies, with estate planning and asset protection entities. So protect the most important things once you have grown them, but don't get all caught up in protection before you have any assets to protect. Focus on improving your own skills, generating cash flow by adding value to others in this world, generate assets that also cash flow for you, primary being your business and then your real estate. And they will help you with taxes. They will help you with your own personal confidence. They will help you through the tough spots because you have built a massive 30 to 40% of net worth foundational layer that you're growing in a very efficient environment, which enables you to not feel bad, not feel like you're losing out because everybody else has got it in crypto or Nvidia stock. Build that foundation, hold on to it so that you can sustain your business, you can sustain your mindset, and hold on to your real estate, and you will move in one direction throughout your life, and that is vertically building that beautiful hierarchy of wealth so that you can then turn it into income in our next meeting, and finally legacy in the last part, phase 3, of how we operate with cash flow and wealth throughout our lifetime. Until next time, reach out to me if you can meet me in any of those locations, and go make something amazing happen in Gary's Gulch.